Thank you, Monica, and I hope we can live up to the expectations you've set of us bringing enormous clarity to this discussion. We'll see what we can do. We've had a great IIF week in Europe on a series of digital innovation topics. I want to take the chance to give a quick shout out to our friends at Commerzbank, who were a very generous host for the IIF Machine Learning Roundtable that we had at their Frankfurt headquarters yesterday. And I also had the privilege of visiting Stockholm earlier in the week and recording a couple of new podcast episodes we'll release shortly on their cashless economy and the e-krona. And I think I mentioned those things just because I think there are a couple of very specific examples of some of the emerging innovations we're seeing that are becoming more embedded. But as Monica alluded, the broader themes of innovation and disruption, digital transformation, are now very much entrenched as key themes throughout the industry. And they're entrenched from both within and without, from the digital innovation that's happening within a firm, as well as what we're seeing coming from the form of some of the disruptors and emergence of new competitors and changes to market structure. We're going to get a bit into discussing how banks and insurers actually bring innovation to market, the barriers, the challenges, the execution in doing that. But first, we're going to start by looking at the overall landscape, the competitive market and what changes we're seeing in customer expectations and the landscape. So perhaps with that as a cue, Mariana, I'm going to start with you. Where digitisation brings both new challenges and opportunities for our industry, and those dual items of the emergence of new technologies and new competitors, as well as the challenge of keeping pace with the rapid evolution of customer expectations. How do you see the landscape for the industry, both in terms of business models and market structure?
Well, I think, and going back to the previous panel, I think that within the uncertainty we still have, I think most financial institutions now, we have some clarity in the strategies we are implementing to basically face both the rapid evolution of technology on one end, and then the appearance of new entrants. And I think that in the part of new entrants, we all differentiate quite significantly between what we call fintechs and small players and the risks and the opportunities that big techs may represent. So I think in terms of opportunities, basically we all have realized that we have a fantastic customer base to start with, and that we have, even though we've gone through the different steps through the relationship with our customers, we still have the trust of most of them, obviously. And building on that, we are all improving certain capabilities. And I think this is quite similar across the different markets and institutions. We all focus much more on improving customer experience. We recognize the changing expectations and the good job that the new entrants, both fintechs and big players, are doing in that front. And we are trying to learn from that. And I think that most of the financial institutions have advanced significantly there. And I think that also, basically, fintechs realize that it's something that we can keep up with. We are also, and I think we are going to touch upon that in the second question in more detail, we are also trying to evolve our legacy system, all the technology piece. In here, we have on one end to embrace new technologies, and this is bringing more uncertainty, but sometimes when the technology is new, it's also easier for us. And in here, there will be certainly follow-up questions on blockchain and what the Facebook initiative entails for us. It's more challenging when we need to evolve the legacy and the core system of financial institutions, and it takes more time and effort, not that it cannot be done. So I think that in terms of opportunities, we realize what we have to do, and I would summarize that we have initiatives that are in place to face the new challenges and opportunities, to engage with customers and being relevant for them. In terms of market structure, I think we all recognize and we perceive that fintechs are very much willing now to collaborate with us. A lot of them are also approaching us with a proposal of being a provider, a tech partner for us. In terms of the big techs, we have gained experience partnering with Apple's and Google's in all the payment solutions in the mobile space. And we have a new set of opportunities and challenges ahead of us as we speak. And we will continue to figuring that out, I guess.
We'll come back to a couple of the topics you've mentioned there subsequently, particularly where you mentioned about legacy IT and moving from that. And we will also pick up the point about the Facebook Libra initiative a little later in the conversation. Nakata-san, if I can turn to you, and most of the public commentary that emerges around digital competition and new entrants tends to focus a lot naturally on the consumer sector. But I'm curious from the perspective of Nomura's business model, how do you see the trend of digitisation impacting on your business?
Thank you, Brad. Well, first of all, I'm delighted to be here. Coming a long way from Tokyo, I feel a bit stranger. So maybe I should start talking about who we are, what we do. And Nomura is a Tokyo-based, Tokyo headquartered securities company. What we do, in Japan, we are the largest brokerage firm and also financial advisory, investment advisories, together with the asset management. And globally, we are engaged in the wholesale businesses, but we don't take deposit. We don't lend money. But what we do is the underwriting, trading, sales, advisories, M&A advisories. So it's really the investment bank, not the commercial bank. But it doesn't really matter. Without technology, we won't survive. And that said, that Nomura is not really a front runner in this space. And it was probably just about 5 years ago. We took a quite serious step to be involved in the technology space and started the R&D type of initiatives. And so our approach is that try to find a partner in particular business segment. Let me start with the retail business in Japan. And we started a joint venture with one of the largest social media company in Japan. The company is called LINE. And they wanted to enter into the financial service businesses. And we wanted to leverage their business model, their reach to a wider consumer space. So that was the very interesting combination. And of course, we are totally different companies. For example, the benefit for them, social media company, that the financial industry is highly regulated. So they need someone who has a good understanding, knowledge, how you can comply with all the regulations. So that's why we chose to each other. And on the other hand, on the wholesale space, it's quite obvious that in the wholesale space, business environment has been quite tough. Due to several reasons. And of course, the relatively slow economic growth and quite low interest rate environment. And, much higher regulatory burden. And so we are under enormous cost pressure. And also, because of that kind of environment, and many banks or the investment banks shifting from flow businesses to the more high margin businesses. And so we have to take some radical action on the flow businesses, like trading businesses. So we started the joint venture again with one of the hedge funds to develop IT AI-driven market making platform. And we haven't really launched yet, but we haven't developed a pretty good system so that we will be able to introduce to the market sooner or later. And that means that we will see significant change of our business model. And lastly, I just want to touch upon the new asset class, crypto assets. We have initiated the two joint ventures. One is about the crypto asset custody solutions. We team up with one of the technology company and also asset managers. to develop custodian services, solutions for crypto assets. And the other initiative we just announced last week is the securities token business platform. Well, it's probably still a long way to go because, first of all, we have to see legislation by the regulator to allow that kind of a new asset classes to transfer the titles of our securities certificate. But the idea is that the once we can introduce securities tokens, then that token can carry several other rights altogether. And for example, well, let me talk about one example. Well, a couple of years ago, Toyota Motors issued a new class share. So it has a higher dividend, but quite illiquid. You won't be able to trade very frequently. It's not listed. And, but also there is certain benefit about Toyota services, like future mobility services. So if we can develop a securities token that has not only a dividend, but also can bear other benefit in one, the electronic token. So that will change the business model completely. Potentially, that could be quite disruptive because we may not be able to be involved in the businesses like underwriting or the syndications.
So I think you've already alluded there to a number of interesting joint venture scenarios, and I do want to pick up a little bit further on the notion of where incumbent banks and insurers are partnering with other firms as a means of delivering innovation. Before we do that, Delphine, I might turn to you, and perhaps we've already started discussing here about what the industry is doing to transform itself, but what about from the official sector's perspective in terms of supervisors, what does this mean for supervisors in how they look at both themselves and the industry?
So basically, looking at all this transformation in the past years in the Commission, we have also realized that all these changes require lots of competencies across services. So it's not about financial services legislation only. It's also about tech, about data, about competition issues. So we start to look, we look into these issues, I would say, cross services, and that's what we have done in the past 2-3 years. And we also try to push the supervisors, like the regulators, to engage with the industry. So we think, and we have supported this approach from the start, that is very important for us and for the supervisors at national level to meet these firms, to meet fintechs, to meet the banks when they are transforming the way they offer services, because it's the only way to understand the challenges, the possible new risk, the regulatory issues that are there, and there are a lot of them. 2 years ago, when we were looking into the EU, we had very different approaches. So we had supervisory authorities with huge teams looking into innovation. In other member states, it was not existing. After 2 years, we supported this, pro-innovation attitudes. We see a completely different landscape. This year, the ESAS published a report in which they announced that we had almost hubs, so innovation hubs in all authorities, and a number of sandboxes in the EU. But of course, they were not talking to each other, and we need to share a lot at EU level. So in April, we have established what we call a European Forum for Innovation Facilitators. So it's run by the ESAS, and the Commission is an observer, like the ECB, and we will meet regularly. So the first meeting will be in September in Paris on very specific use cases. It could be impact of APIs, use cases on AI use cases, blockchain use cases, to agree quicker on supervisory and regulatory approaches. So this is a first element where we have done a lot. We have also set up what we call an EU FinTech Lab in the Commission. We host it together with our colleagues from DG Connect, so the DG in charge of technologies, digital single market. And in this lab, we invite directly tech providers, financial institutions using or working with these tech providers, and supervisors to discuss concrete use cases and, of course, address the issues that are raised. So by doing that, we try to get a better understanding of this moving landscape, because now we have lots of different actors. We have the traditional ones, but we have the smaller startups, regulated or sometimes not regulated because only providing other services to the regulated entities, and other actors which are now in the, I would say, in the overall financial landscape.
Before we dig further into partnerships and joint ventures, I want to follow up on a point that Mariana raised early on about legacy IT and the replacement and surpassing of legacy IT. And one critical enabler in this space, I think, is cloud. And I think it's significant that a lot of the conversation, I feel, has moved in the last 12 or 18 months from the risk of cloud to increasingly the risk of not moving to cloud and having to maintain that older infrastructure, and the extent to which that contains or restricts your ability in terms of some of the new products or new ventures you might want to do. I'm interested in your thoughts on that, firstly, and then Nakata-san as a Chief Risk Officer, Delphine from the official sector, perhaps your thoughts as well. But Mariana?
So I think, as I mentioned before, when we develop services or we incorporate new technology in existing products, some of these services are already, or we consume them already from cloud. So if we look at cognitive solutions, so we may combine internal development with services that we may get, in this case, from big tech providers, but these services are already being served through their cloud offering. When we look into blockchain, it's a bit the same. So we are developing, or we are part of the consortium known as WeTrade. So these new solutions come already from cloud development. And then we talk to the authorities. It's a bit cumbersome, but we are going through the process. We inform, they understand. It's still early stage, so they tend to be solutions that are not widely used or not considered so critical yet. And I think this is running quite smoothly in a way. Then we have the use of cloud when we want to use cloud for processes or solutions that are a bit more critical in terms of data. And in here, at least our experience is that, again, as long as we can be precise and we can secure the data we are bringing in the cloud, regulator is also open to that. And I think the third work we do, and it's still the one that takes more time, is how we basically revise our applications to be able to bring them into cloud. In this case, what we are thinking, most of us, it's private cloud, and that the benefit is how we manage our data centers or the arrangement we have and our infrastructure, leveraging the benefits of using cloud. But again, this is a bit more cumbersome. I don't know if you also are saying yes, because sometimes we need to redo some of the applications to be able to benefit and to be able to bring them into the cloud without getting very technical here. So this takes more time. But this is basically the three strategies, and this one, it's less complex from a regulatory point of view, because at least what we are considering now, it's moving to a private cloud. So we are not bringing anything into the public cloud. When we consume directly from the public cloud, is that there's technology now that either you use it from the cloud or you cannot use it. So there are no many options left, let's put it this way.
Nakata-san, could we get a reaction from a perspective of a risk practitioner, and thinking not only of operational risk but also the business risk if you are not able to bring the new services to market that you might need to? Right. How do you view such new technologies as a risk practitioner?
Right, yes. Well, I'm not a chief technology officer, but I'm a chief risk officer. So just coming back to my original job. So yes, well, there are a number of specific risks that we have to deal with, as just Mariana mentioned. But the significant challenge, the most significant challenge and potential risk that I feel is the risk of a transition. Whether we can successfully transfer or transition ourselves from a legacy business model to a new business model. Well, I must say that we do not have much of a choice. For example, as I touched upon, that in our retail businesses, we started a joint venture with one of social media companies. There are a number of reasons, and predominantly is coming from the demographic change in Japan. Shrinking population, aging society. That will have a quite significant impact on our existing business model. For example, our business is really focusing on the high end of the client pyramid, so a relatively wealthy segment. So that's why we have in Japan, we are the largest, the brokerage house, but still we have only 5 million accounts. On the other hand, the social media company that we joint ventured, they have 75 million subscribers. So it's a huge difference. And the reason that we try to approach much wider consumer segment is that our client base is aging. That means that they are becoming more and more conservative. And what they are quite worried about is not really how to make money, but it's really how they can, transfer their wealth to their children. So they become more and more conservative and less active. So that means that our business margin will naturally shrink. Then also we have to approach their children and the grandchildren as a potential new clients. So that's why we have to use these technologies. Last week also the firm announced that we are going to close down almost 20% of our domestic branches, and because our clients don't come to our branches anymore. So we really don't need so many branches. And so clients' behavior is shifting from face-to-face to more of a digital space. So that's why we have to move to a new business model. However, it's not so easy because, still in our retail businesses, we have about 8,000 people working. So they have some resistance to move to a new business model. Of course, there is always a cannibalism aspect. So that is the quite significant challenge. So we cannot accept that kind of attitude, but it's really it can be quite disruptive for our existing businesses. So that is a challenge that we are really concerned about, and so that's why we try to come up with the new approaches, try to segregate certain new approaches, new initiatives from the existing businesses, try to grow that particular initiatives, and a little bit the remote atmosphere.
It's a really interesting point you make there about the preferences of people in an ageing population, and I think we see this demographic change in so much of the world, but Japan's probably been a little bit ahead of the curve of others. But we tend to naturally focus on the affordability of pensions, and the point you make of, actually for a lot of people it's more about how do I safeguard wealth transfer, the changes that drives not only in investment preferences but also for customer delivery to keep up with. It's a really interesting one. Delphine, from the official sector's point of view, and if I can plant a seed here, I think in the engagements we've had with officials around technologies like cloud, I've often characterised them as being anxious to learn more, and that's kind of been my impression, that they've been very keen to learn about these new technologies, and that's really been hopefully an input into becoming more comfortable about them and their use throughout the financial system. Interested in your thoughts or reaction to that?
Mm-hmm. So basically on the cloud, 2-3 years ago, we tried to understand first from the banking industry that was wanting to use more cloud, the obstacles that they faced. And they basically said that they were, of course, they were wanting legal clarity and also more convergence across supervisory expectations in the EU. So it could happen that one bank being active, let's say, in 6-7 member states, when they were meeting the supervisors in different member states, they were getting different supervisory expectations vis-à-vis the use of cloud. So what we have tried to ask the European Supervisory Authority, so basically the European Banking Authority first, was to clarify what was needed in the case of the use of cloud. The EBA started first, and they did it. They started in 2017, and then they completely, I would say, revised the outsourcing guidelines to clarify that. The insurance industry will do the same, and EIOPA promised to get similar guidelines by the end of this year. So we are progressing. In parallel, of course, we have had two very important legislation in the EU, GDPR for the personal data and the free flow of non-personal data that enable data to, to be moved inside the EU, and you cannot impose local restrictions. So you cannot impose that your data are stuck in a country. So we have these two important texts, which of course represent a big progress. And we are still working on very important issues in the context of the implementation of the free flow of data. We are trying to ensure that financial providers, like any other providers, are not locked in with cloud providers, because it's a super concentrated market. And we are also probably going to work on establishing a standard contract clause between the financial industry and the cloud providers. So that would be for the next Commission.
You've given me a really good cue there to plug an upcoming IIF piece of work. Since we completed our three-part series on cloud earlier in the year, we had a lot of questions from supervisors right around the world of, so should we be thinking of the CSPs as critical infrastructures, and if so, what would that actually look like? And that's a piece we're working through at the moment in defining different models and the pros and cons of that treatment, which I agree is a really pertinent issue. If we can continue a little on the notion of partnerships, and in some cases that's joint ventures, in some cases it's vendor arrangements. Mariana, you alluded to this earlier, and I think there's the distinction between the big techs and the fintechs, or the smaller fintechs in some of those engagements. Our CEO, Tim Adams, loves to tell the anecdote about how when he went to the Money 2020 conference 3 or 4 years ago, that everybody was there in jeans and t-shirts straight out of the garage, and how they were going to disrupt and change the world. And 2 years later, they were all in their polo shirts with corporate logos looking very much like vendors. But as you look to bring in innovation from outside of the bank that you can utilise or partner with, what are some of the challenges or barriers that you run into in trying to pursue those sort of endeavours?
I think we have one challenge, but it's currently being addressed with all the regulatory sandbox we see in different countries. I think in Spain we also have one of them. These allow us to partner with the startups and under a regulatory sandbox environment, maybe test things a bit different and then make a proposal on how the solution would look like. This, at least in different markets, is already being implemented, also in Spain. These allow us to improve certain processes that are very critical, like customer identification, how we use biometry for all these digital processes, things that we are used to, well, we are more and more used when we deal with digital and also big tech players, but then when applying this into the financial industry, we still need to be really careful on data, on security, and all these reasons. I think this is obviously could go faster, but it's being addressed. That's one area. I think that then the barrier, again, it's sometimes about how you integrate these technologies with your legacy systems. But more and more, we are also making the effort to having more internal APIs to connect to external world. So this is becoming less of a burden. Again, it may take time because it requires some efforts. And the third situation, but sometimes we face more legal challenges when dealing with big techs, when discussing about Apple Pay solutions or Google Pay solutions. The challenge there is not so much technical, but from the regulatory perspective or the data in certain cases, the demands or what they pretend to get, it's a bit of a challenge under European law. So in our case, for example, we've moved ahead with Apple, with Samsung Pay. We haven't moved ahead with Google Pay. And I think we have different or similar experiences with different banks and different markets. But it's a bit the situation.
We'll return to that point you make about onboarding other payment vehicles in a moment when we talk about Libra. But Nakata-san, if I can ask you, similar to Mariano, are there particular barriers or risk concerns that you have when you look at some of the joint ventures that you described earlier?
Well,
Or perhaps, but let me phrase that better, the risk concerns that you were able to overcome in making those ventures.
well, the risk concerns, well, yes. Well, if you ask chief risk officers, well, maybe 100 of chief risk officers, what's your top risks? And the three, well, usually, the top three is almost always come up. One is cyber, conduct, and vendor management. So, well, of course, we have to use more and more external partners or the vendors. So, how we can, make sure that we have robust processes to choose vendors, to provide guidance or the surveillance of our vendors, that can be quite challenging. And we haven't really entered into the use of cloud, especially we do some use of private cloud, but we haven't really started using public cloud. It's kind of a trade-off that we can gain the efficiency by using a public cloud. But at the same time, how can we make sure that we have a proper, robust, sound vendor management? So, well, we haven't really come up with the solution yet. And so, well, that's kind of new challenges, especially from a risk management perspective.
And Delphine, in terms of some of the work that's being done with the FinTech Lab, some of the initiatives in the RegTech space in particular, are there particular learnings from that you could share with us?
Yes, so basically, we can speak about partnership or cooperation, and it can be between regulated and regulated entities or regulated and non-regulated entities. And in these second categories, we are looking into the possible benefits that RegTech could bring to the financial industry to do the compliance cost more efficiently. So last week, we discussed these RegTech solutions with a number of providers and financial institutions that start to use it in the FinTech Lab. It was very interesting. We had a lot of tech firms, of course, around KYC, digital onboarding, or AML related solutions. We had also other solutions that wanted to partner with banks for reporting or compliance tools. We have also AI explainability models that come onto the market. So in the context of these discussions, these small firms and the financial institutions really said that they need a closer cooperation between all the parties, so the RegTech, the regulated entities and the supervisors, because the financial institutions need to be sure before engaging with these smaller firms. Sometimes it's a really niche market, so it's not so sure whether the firm is solid enough. And of course, the supervisors also need to understand if these RegTech solutions are used by the financial institutions, that of course the regulation is really complied with. So this is an area in which also we think that we could get efficiency for the sector. Lots of developments relying on AI or AI machine learning, usage, and lots of interesting firms emerging also in the EU.
Yeah, absolutely. We've got about 5 minutes left until the afternoon coffee break. I'm going to do a couple of sort of rapid-fire rounds, if we can. Facebook's Libra currency, and this ties in with a couple of the questions I've had come through on the app, so thank you for those. We're kind of melding together the crypto issue together with the big tech issue, the regulatory dynamic, the regulatory perimeter. Wanted to get some thoughts or reactions from that, where that's been the big news of the week. Mariano, if I can start, I guess one of the questions is, do banks look to follow the customer's lead? And if the customer is wanting to engage in these particular, call it a currency or what, what's your initial reaction? I know it's only been out 48 hours and it's a bit premature, but what's your initial reaction?
So I think, yeah, the 48-hour analysis we have so far, I think, first of all, I think we have to differentiate, or at least for me, it's useful to differentiate on the Libre Association and the network, framework, new language they've published, all the technology development and the impressive group of partners that back the initiative. And then I think a second discussion is what is the intent of Facebook and what are the solutions that they want to launch already in 2020, building on that technological solution. I think that from what we've seen, and we've seen several attempts already, some coming from financial institutions about launching their own cryptocurrency, what we've seen in 48 hours seems to be probably quite robust and one of the best attempts so far in that direction. So I think that assuming the acceptance from the regulatory body, from the community, customers, of course, one of the stakeholders, I think this is a ground, and from this ground we can start thinking that at some point we will be able to build certain sort of cryptocurrencies, and this opens up a new set of possibilities in terms of products, services, and of course how we have to adapt to that new scenario. I think you already mentioned that in your case you already have in Japan a crypto asset and the possibility to hold that. We have different situations in Europe, and we have banks that already have moved in that direction and some others that not, and then we will have to consider being Libra the technology or some other technology. I think this is one end of the big announcement this week. I think then we need to look what is the intent of the big techs and then see how we have to respond and how we have to adapt to the applications that will be developed using this technology. But again, the same we've been doing with new launches, I would say almost every year for a while now. But actually very interesting in any case, so we'll see.
Nakata-san or Delphine, anything you'd like to add to that?
Well, maybe people remember that Japan used to be the most active trading market for Bitcoin.
Yes, indeed. Yes.
Well, there were a number of incidents. Generally speaking, financial crime entering into the exchanges, Bitcoin exchange or cryptocurrency exchanges. Number of them used to operate in Japan. But so because of that, Japanese regulator, JFSA, took a quite decisive action. So they have cleaned up most of the quite loosened, governed exchanges from the market. Now the bar is much higher. So that was kind of initial experience that Japan had. So, well, probably now we are in the moving to the next stage. And eventually, I think there is significant potential for crypto assets, or we sometimes call it the tokens. And that can be used for many different purposes. Not only the trading purposes, but some sort of value, carrying some sort of value by electronic format. So that could be quite disruptive, but probably that's the way that the world is going forward. So, well, I must say that I have to be a bit pessimistic about the financial industry. What sort of the firms can really survive, and so it's probably potentially a matter of time that many of the financial institutions need to change their business model, the way they run the businesses.
You're going to have to reinvent or perhaps disrupt yourself in order to survive. Delphine, I don't know if you want to add. It's probably a difficult one to comment on from the official sector perspective right at the moment.
Yeah, so of course we are looking into this project. It's for us, it's only at project stage, but we are going to monitor it closely. It raises a number of regulatory questions that we have already touched upon. So for the financial services legislations, for AML rules, very clearly. Maybe what is interesting to recall is where we stand on crypto assets at EU level, because we have conducted lots of work in the past months. So basically, a couple of months ago, the Commission asked the ESAs to say whether the existing EU law applies to crypto assets. So ESMA and EBA provided a technical advice in January, where they said that in certain cases, crypto assets could be considered either as financial instruments or e-money, but that in many different other cases, they would not fall under the existing EU law. And then they raised the question of the necessity to get a new EU framework. In April, so VP Dombrovskis, our commissioner, announced that we will continue the work on these two streams. So for those who could have the characteristics of financial instruments and e-money, see how and how we can apply the existing legislations, because sometimes all the provisions are not easy to apply in a blockchain environment. And for those who are not, whether we have to develop a new EU framework. In the EU, 2 member states have already proposed new framework for this second category. It's France with the recent Loi Pacte and Malta. So we will follow very closely on this issue in the coming months. And the work we are doing at the moment are really now, of course, to be ready for the next Commission.
A couple of interesting precedents to watch further there. We've hit 3 o'clock and it's coffee break time, so unfortunately I haven't got through all the questions that I had for the panel. Thank you for the audience questions and apologies for those that we couldn't get to. I want to mention one last newsworthy item. Obviously, so much of the focus in the fintech policy space this week has been about the Facebook Libra initiative. Today is also the day that the Bank of England will be announcing and publishing their Future of Finance report that Hugh Van Steenis has been preparing for the Governor. As of when we came on stage, when I last checked, that hadn't been published yet, but we'll look for it this afternoon. And I just wanted to convey our thanks at the IIF to the Bank of England, who engaged very strongly with us through that process, including when they gave us the opportunity to convene a workshop with our members to discuss priority issues. So our thanks to them, and we look forward to their report with great interest. But more importantly, we'll hand back to Monica, but please join me in thanking our panellists.